Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Friday, August 28th, 2026. It's Jackson Hole Day. More on that momentarily. But in today's video, I'll outline why there's another major event that we should be watching at the exact same time that could have an even bigger impact on markets. Let's get into everything that you need to know ahead of today's US Open. So as most of you know, new Fed Chairman Kevin Warsh will be delivering the keynote address at the Jackson Hole Economic Symposium at 10 o'clock Eastern Time. Ahead of this highly anticipated speech, markets are for the most part consolidating with no major moves. I wouldn't be surprised if we do get some volatility once we get some more insight, or not, into his monetary policy philosophy and especially his views on what the U.S. Treasury is doing. I talked more about that in detail in yesterday's video, so check that out if you're still ahead of that speech. But at the exact same time, 10 o'clock Eastern today, we will also get benchmark revisions, preliminary benchmark revisions to the non-farm payrolls report. Of course, this is quite backward looking. It covers the period from April 2025 to March 2026. But this is essentially, now that the Bureau of Labor Statistics has all the economic data, a lot more detail, how many jobs actually were created in these NFP reports that we've been reacting to for the past couple of years. The only sort of consensus expectation I saw was from Goldman. They suggested this could be a positive revision of 450,000 jobs. If that is what we see, all else equal, that would decrease concern from the Federal Reserve about the labor side of its dual mandate and could push the central bank closer to raising interest rates to address inflation. And if Kevin Warsh sort of demurs and talks a lot without saying anything, as he's shown a tendency to do so far, I think that benchmark NFP revision could be an even bigger market moving event. So you'll definitely want to make sure you're at your desks to evaluate both of those dueling economic events. The only other news we had over the last 12 hours that's particularly relevant was the Tokyo CPI report. That came in a bit hotter than expected, 1.8% year over year. I believe that's the core CPI number, which is more relevant to the Bank of Japan, despite the fact that after this hot inflation reading, traders are pricing in about an 85% chance that the Bank of Japan will raise interest rates at its next meeting. The yen is still the weakest major currency, which leads us into today's chart of the day. The US dollar versus the Japanese yen. Here on a 4-hour chart, we can see it's been mostly range bound after the big intervention event by the Bank of Japan and the US Treasury, currently consolidating between about 158 and 159.75, as it has been for basically the entire month of August. However, we're seeing what should be bullish economic news for the Japanese yen, rising expectations of an interest rate hike, and nonetheless, we still see the yen weakening, or here on this chart, dollar yen trending gradually higher. I think if we can break out from 159.75, it'll be a quick trip toward 160, and that is where the risk of additional intervention from monetary policy authorities on both sides of the Pacific will grow. So very interesting setup here. One of my favorite setups in all of trading is when a market doesn't move as it should on fundamental data. That to me suggests that there may be bigger issues at play, and that's exactly what we're seeing here with the Japanese yen. A key one to watch throughout the rest of the day and into next week as well. That is today's video. Thank you for taking a couple minutes out of your day to watch. If I can ask just one quick favor before you go, just drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again. Best of luck with your trading today and have a great weekend.